Hey everybody, welcome. Thanks for joining us for today. I'm really excited for the conversation today. It's been great to have such a talented group of people join us today to talk about AI, how it's impacting funding for startups, and also how it's impacting teams as well. So for those of you who don't know me, my name's Cal Davidson. I look up for partnerships and community at Cake Equity. I've got Tila, who's our lead here in Australia with us today as well, moderating or helping facilitate the session today. A little bit about my background. So I spent 20 odd years in equity markets and also financial services, including running investor relations for one of the biggest banks here in Australia, and transitioned to Cake into the startup world about 5 years ago. And with Cake, we're here to help founders and navigate through everything to do with your startup equity. So be it from the early days on, issuing a safe note to your early stage investors, to doing your price rounds and then multiple funding rounds, but also to actually empowering and growing your team with the motivation, unlocking the motivation power of equity incentives as well. And our platform helps you look after all the admin associated with that, streamline all the equity stuff so you can spend more time on building. But it also gives you decision tools that help you make smart decisions along the way. Things like, we've got modeling tools in there so you can model out equity rounds. We've also got a benchmarking tool, so you can actually look at what other Cake users are actually giving their team members when you're giving the equity grants for your team as well. A big part of my role is helping educate founders and also bring the latest data to the market so you guys can actually understand what's going on and make really informed decisions. And that's why I love what we're doing today and looking at how AI is impacting funding for startups, but also teams as well. And I couldn't be happier to have such a great talented group of people joining me for the discussion today. We've got Chris Gillings from 5V Capital. We've got Kate from Airtree, and we've got Yash from Empress Capital. Kate, if I could start with you, maybe do a brief introduction and before we get started.
Yeah, that sounds great. Thanks, Cal. Hi, everyone. I'm Kate. I'm an investment manager at Airtree. Context on Airtree, we invest in tech startups coming out of Australia and New Zealand. Our remit is kind of that broad. We kind of invest the whole way across the spectrum from pre-seed, person with an idea, all the way up to Series F. We recently participated in sort of Airwallet's latest raise. So full way across the spectrum. If you look at our portfolio, we typically invest in B2B software. So 80 or 90% of what we do is in that kind of bucket. But that doesn't mean we don't look or consider things outside of that. It's just that typically like the characteristics that we look for tend towards B2B SaaS. Context on me, I joined Airtree just in December last year. So I've been here almost a year, but obviously I feel very privileged to be asked to do this and to chat alongside Chris and Yash and Cal. So that's the context on me. I think that's kind of all you need to know for now. I'm happy to answer any questions on Airtree and myself in the meantime. Looking forward to the chat.
Thanks, Kate. Chris?
Yeah, thanks, Cal, and thanks everyone for joining. My name's Chris Gillings. I'm a managing director at a firm called 5V Capital based in Sydney. 5V is a little different in that we have private equity, growth, and venture capital under one roof. So all discrete teams, discrete funds, but investing at all different life stages of the life cycle of a company. My team specifically, we focus on companies that are in B2B software, but have found the early signs of product market fit. So typically around the $1 million mark of revenue is where we start. Traditionally, that's been called Series A. We can talk about what that looks like today. My background prior to 5V, I've been here for 3 years. Prior to this, I was in the US for 10 years, most recently running MasterCard's corporate venture strategy for the US and Canada. The other reason I'm here, and probably the reason I got the invite, is I run a business called Cut Through Venture, which produces industry insight reports and data sets for government, corporates, and I guess the broader startup ecosystem. So really happy to be here as well. And I'll hand it to Yash.
and amazing taste in art as well.
Can't lay claim to this particular piece, Cal, but I'll send on the feedback.
Yash.
It sounds like you've got a talented artist in the family, Chris. I think that's definitely. Hi everyone, and thanks, Cal, for the invitation. My name's Yash Varma. I'm the founder and general partner at Empress Capital. Empress Capital is a VC that's really focused on early stage AI. That's been our sort of shtick, as Draw, who's our investment strategist, says. Since the beginning, we believe AI is changing almost everything that happens. Sorry, I have in a booth here. Light comes on when I just wave my hands. Look, we focus on AI when we talk about AI, 3 buckets: applications, tools, and infrastructure. We are really made up of founders and investors who have that background. So I had a software business for 20 years before this, exited that about 7 years ago. Same thing with our team. And we believe, like my first business, early days of the internet, we're at this stage where AI is really changing every business, and it was at this very early stage. What's evolved within our firm as well has been we've launched both from an investment point of view, the fund, but we also do advisory work now in AI, as well as building a studio out. And we see there's real opportunities and gaps in the enterprise space as well. A couple of our investments, we're early investors. I focus primarily Australia, but we have early investors in Anthropic some time back, and we has some thesis around where enterprise is going. And look, we've invested across all different sectors, from prop tech to ag tech and so forth. So I might leave it at that. But we're really excited by what we're seeing, and yeah, we're really trying to build community around this because we're all learning as this evolves at rocket speed.
Great. Thanks, Yash. I just picking up on one of the threads, and one of the things you mentioned there is one of the things that we'll do is I'd like to just scene set a little bit for people. It's like you mentioned the areas that you are investing in. So when you're thinking about AI funding, is it those areas you spoke about? Can you maybe elaborate a little bit more on that? Are there other areas of the AI, what you would consider an AI first business that's outside of what the areas you're investing in? So I'd like to provide a little bit of context about how you think about AI investing.
Yeah, to me, Carl, is that what?
Yeah.
So our focus, and look, we believe there's, we look in historically how things have worked out. And if I go back to the early days of the internet, we think about what are the areas that are going to benefit from this big shift, what we call a platform shift. And so when we initially thought about this, infrastructure is definitely, and we see that with companies like NVIDIA, but there's a whole range of other companies that are being built out. There's a tech stack that's being built out. I'll give you an example. So from our point of view, we believe encryption and identity is going to be really important as we go along. And so we believe in that infrastructure space. There are opportunities that aren't just in that compute. So that's the infrastructure bucket. Tools are really important as well. So as things become simpler, we believe that there's a whole bunch of tools, whether it be around training or development or even in that model space, that are being built out, and will continue to be that case that really accelerates the growth. And then the third part is that application layer, and we feel like Australia, that's going to be where things are, a lot of companies in that space. We think a lot about AI. You sort of talked about this AI first organization, and we think that's where these new startups that we are really excited about are that's where the opportunities are, based on using AI throughout the whole business. And that's what excites us, because the structure of the organizations look different. And if we look at what's happening in the marketplace, we did, like I say, put money in companies like Anthropic, but you see companies like Cursor, 0 to 100 million. There's just this growth rate that is like nothing like we've seen before. So it's really exciting to see, but also challenging to understand there's a lot of AI washing, and everyone's an AI company now. So it's really about I'm happy to sort of elaborate later maybe around what we look for in that, but I'm sure like Kate and Chris have their views around that.
Good hand off. Chris, do you want to add anything to that?
Yeah, look, the majority of the opportunities we're seeing are at the application layer. So basically SaaS 2.0 or 3.0, wherever we are. I would say of the companies sitting in our pipeline at this moment in time that are playing in pure play software, there would be none that haven't got some AI angle to them. I think the the job for us is to figure out whether or not it is, as Yash mentioned, just AI washing, or are the founders and the engineering team, product teams, really understanding the value that adding this new piece of technology to the stack can actually deliver to the end customer? Because at the end of the day, if you're just slapping in a chat bot into a product that doesn't really need it, then we're of the view that it's a waste of time and potentially it's certainly a waste of resource and cost, because the gross margin on that line item can be challenging. So big job for us is to understand whether or not the teams that are building with an AI functionality are doing it still with the customer in mind. Is it actually driving additional value above and beyond what the product could do without it? And then trying to figure out if the teams really understand things like model selection, the trade-offs between quality, speed, cost, and there's lots of foundation models, mainly out of the US, but also other places around the world, that are being built. And there is as we all know, there's a new model coming out every week, and there are very specific models that are better at doing different things. And so when we are meeting companies that are like truly AI at the core, and they've passed the test of saying, like, is this valuable to the end customer and does it make the product better? When you speak to the product teams and the founders, it's like really understanding whether or not they've got a good understanding of the various trade-offs that you need to make in terms of bringing in new product and new models. Because you could, for every use case, you could go for the cutting edge models that are available from any of the providers, but that comes with cost and often speed as well. So there's so many different dimensions, and as Yash said in his opening, we're all learning about this in real time. The landscape shifting like underneath our feet every few weeks, it seems. So it is a super exciting time to be investing, but it is also a tricky time to be investing.
Yeah, I mean, as you were saying that, I was just thinking about, that's a personal journey as well, right? With AI, it's like, ChatGPT announced Atlas, their browser, yesterday. Like, it's just like, trying to understand where to focus your time and energy and what's worthwhile. Kate, love to get your thoughts, just adding to that as well.
Yeah, I agree with a lot of what Chris actually said just then. I mean, at Airtree, we're seeing most opportunity kind of at the app layer. And there's pretty much nothing that's in our pipeline that doesn't have some sort of AI angle. Like, I think if you're building a new company today and you don't have an AI angle, it's really, really hard. And then, like, yeah, again, I agree with Chris. The hard bit is then filtering out like where the actual value comes in these new businesses. Like, a lot of people can spin up a new AI voice agent or note taker. It's figuring out kind of like, does this founder, does this company have the vision to embed themselves into a workflow and build out a tool or an application or a platform that has sustainable value beyond kind of the initial 10x efficiency gain that you get from AI? Because we see a whole bunch of that. What we want to try and figure out is like, who's going to get embedded into a workflow and have sustainable value beyond that initial 10x sort of efficiency gain. And then one other point, just again, what Yash was saying on the kind of infra layer, yet no, we don't see as much of that here in Australia, but I think there are still some opportunities, like particularly in observability, which is kind of like the layer like one above sort of AWS, where you're still a software company, but there's big spend and like a lot of growth there and like new companies popping up. So like that's one area that we're looking at Airtree, which is probably slightly different to the app layer, but still sort of software.
Great. Thanks, Kate. So I've got the slides up here for a reason. We do actually have a little bit of data to help just anchor our conversation as well. So I might just kick off and run through a little bit of the funding data, and then let's dive into that discussion a little bit more, and then after that we'll dive into the team impacts and also some of the compensation impacts around AI. But the information here that we want to look through, let me just, navigate to this. Sorry, guys. Okay. Okay. So this is the data out of the latest cut through quarterly report. So look, overall, it's actually showing a pretty healthy state of the market at the moment. So it's showing that we've got an uptick in funding rounds in Q3 this year, and what's been, you know, a reasonably healthy year. Obviously not back to where we were through the bubble years through 21 and 22, but both in terms of deal numbers of deals and total capital deployed actually looks pretty healthy. If you break that down into the individual rounds, you know, look at angel and pre-seed, seed, Series A and Series B, the valuations on all of these has actually increased over the last quarter. And this is consistent with what we're seeing across the other markets as well. But one of the interesting elements out of this, and we can dig into it in a minute, is that these charts do actually hide the fact that we are seeing this haves and have-nots position emerging, where you're seeing companies that are actually AI first and are actually leaning into that in a more meaningful way as a core part of their business, are actually achieving valuation premiums versus other businesses that are actually not AI first in the market. And again, we're seeing that domestically, and we're also seeing that overseas as well. We've also got this interesting dynamic that has continued. So we've seen, you know, actually the latest cohorts. This is looking at when did you actually start your startup journey, and then what has that actually done in terms of your progress through funding rounds over time. And the big bit that stands out here, of course, is that the cohorts out of 2020 and 2021 have actually been really impacted by, or 2021 and 2022 in particular, rather, have been really impacted by the funding bubble that was through those periods of time. So you saw that a lot of startups got big valuations during that period of time, and then they've actually struggled to get the growth to then live up to those valuations, then to move on to the subsequent funding rounds. So that's a real story here. I guess the encouraging thing is you can see that once we go into 2024 here, we've actually got more promising metrics here in terms of the initial phase that we've got here. I guess it will depend on what happens over the next couple of years as these companies go through Series A and B to see whether those graduation rates continue to actually improve since they have the post bubble in 2021 and 22. The other interesting thing here is we've got a little bit of a breakdown on the individual sector information here. So we've got the different sectors that are actually being funded in the latest quarterly report. And interestingly, we've started our conversation talking about the application layer and you know, whether a lot of the innovation is around SaaS 2.0, 3.0. But in terms of the actual funding here, you can see that quite a lot of the funding over this period of time actually flowed into hardware and robotics, biotech, and then also climate tech, which has been pretty consistent over a number of months. So there's more information in the Cut Through Ventures report. If you haven't seen it, I'd encourage you to go and have a look at that. But it's interesting because this actually paints a little bit different picture than what you might be expecting in terms of most of the funding going into AI-focused SaaS applications.
Yeah. Cal, I'll jump in on that one. So an interesting dynamic, I think, as it relates to hardware is that, like, there's a flaw in our taxonomy, right? Like, any one company could potentially fall into multiple categories, but at the end of the day, you got to make a call. The way that we look at hardware, robotics, Internet of Things, again, that's obviously a very broad category. But what we are seeing in the data and what we're seeing at 5V, and I suspect certainly at Airtree as well, is that it's almost like, for us at 5V, we've said traditionally that we don't actually want to touch any companies where the IP sits in the hardware. So we will invest in a company where, you know, an off-the-shelf or a pretty low-cost, you know, third-party piece of hardware is used to deliver a piece of software, but we don't want to invest in companies where the hardware is where the IP sits. I think we've probably loosened our rules on that, in that we do think that having some hardware is actually a bit of a moat in protecting you against sort of this new AI wave, which is very easy to spin. Well, not very easy. It's far easier to spin up a new piece of AI-enabled software when there's no piece of hardware attached to it. So we are, and I think a number of investors that I speak to sort of casually are talking about, like, we are now broadening the aperture of like what we'll look at to say one of the potential moats that make these opportunities more defensible, these businesses more defensible, is potentially hardware. So I would say of the hardware component of the 12 deals that got done, I would suspect that a lot of those companies have an AI element to them as well, either embedded in the hardware or in the software that is sort of attached to the hardware as well.
Right.
And the same apply. I mean, biotech, medtech. I won't comment on because it's really out of my circle of competence. But if you go down that list, a lot of those companies, a lot of those categories are software type businesses. And so again, like there is the standalone AI category in there, but you can almost certainly say that particularly the earlier stages, so younger businesses that are still building in software, they all do have an AI angle. So you shouldn't read this as saying that there were only 7 deals done over the course of the quarter that had an AI element to them.
Yeah, for
AI
sure.
really is intertwined through everything that we're seeing at the moment. Even some of the older businesses, like Kate would know more, but like just based on what Jack says on Twitter, like Airwallex is all in on AI.
Yeah, so it's across the sector. Some of the data that I'll show a bit later on in terms of the hiring and where the roles are actually going for more AI focused roles also backs that up, right? It's not all software. It's a lot of it's into different industry sectors. Yash or Kate, have you got anything to add to that?
Yeah, I'd just say I agree with that. That's like I said at the start, Airtree's historically been super software focused, but like completely agree. Like there's a new thought around like maybe hardware is the way to kind of build a moat in the world where you can build software overnight. I'd say, and there's like a few good examples of that. Like Halter is a really good company that's got this like hardware software component, and then there's things like Saronic in the US, which is a defense sort of autonomous surface vessel company. But you know, like a lot of the moat, and they've raised a heap of money from a lot of the big investors overseas, and I think like that kind of exemplifies the trend of like you've got to be a bit like vertical. You've got to be across hardware, software, and building out the full chain. And people see a lot of value in that, probably more in the last 6 to 12 months than they have historically.
Great. And Yash?
Yeah, look, we've always, I believe, you know, AI is in the middle of a lot of other technologies so there's these exponential technologies. And so we think about robotics and genomics and a whole range of other things that play into this. And so, yeah, look, I think there's just opportunities to do things different, run businesses differently, and it's across all sectors. So there is a hardware component, definitely, I think, that adds an element of not just defensibility, but usefulness, and we're changing business models. Part of it will be software. Look, I just feel like there's just massive opportunities across the board if you can understand how to combine 2 separate bits of tech. And whether that be 2 separate bits of data or interfacing with different systems. So yeah, I feel like it's just really reinventing how we think about solutions, software and otherwise. And that's what this next 5, we have a view this was, you know, decade is about applying that. If we think about phones, you know, 2007, the iPhone came out. It's not been that long, and you think about how we live and operate, we're just on this next level of where there'll be different opportunities particularly if we start to think about autonomous driving and all these other things, these other businesses, are going to be these, other opportunities that are going to come out of this.
Yeah, yeah. And Kate, you were making, we discussed previously about, the opportunity to apply the new technology to industries that might not have been really ripe for disruption, or there might have been those opportunities previously as well.
Yeah, absolutely. I think like slightly adjacent, we're talking mainly about kind of like services businesses in that example. So something like an accounting company or a law firm that like traditionally doesn't make sense from a venture scale or margin perspective. All of a sudden, if you kind of have the right setup, the right tech stack, the right team to make it work, you can start like operating at margins and scale that would actually be exciting for us. And so like, I think, probably accounting and law firms is more like the space that I see like that AI enabled services bit taking off. But I think it's similar that AI kind of opens up probably like the biggest trend that we've seen is that there are more companies that are investable for us than ever before. And that comes in many forms. It kind of comes like this hardware sort of verticalization angle. One angle is, AI enabled services. Another angle is just that like a whole bunch of industries that have been resistant to change for a really long time are now more open than ever to new software because it's unlocking better than ever efficiency gains. And so then there's a whole nother new world of startups here as well. So moral of the story is that the investable universe for Airtree is getting bigger.
I think a related but different point on that is that a lot of the companies that have been around for a while, so 10 years or even 5 years before this big wave came crashing in, are now sitting on this big data set. And we've seen a number of companies in our portfolio that are taking advantage of that data set that they own and only they have access to actually implement, like create net new products that they can then upsell to their current customer base. So a business that we have in our portfolio called One Breadcrumb, they just acquired another business that had actually been around for a decade. So they're now sitting on, and they do safety check-ins and other stuff on a work site. So they've now got more than a decade of safety data. And with that, they've turned it into a new product that they're now in market in the US, which is their newest market, testing that product with a smaller customer base. But I think the message is that for the companies that have been around for a while, like what we're seeing is that they do actually have a couple of natural advantages which can allow them to actually take advantage of the current wave that a new startup couldn't.
Yeah, that's an interesting point because there's so much focus on super new entrants into it. So if you do have some IP in terms of the data that you've actually got, and you can make that transition to leverage it, then that can be a moat for you. So just going through and actually drilling down into some more specific AI funding data. So in terms of this data, the stuff that we've got here is actually out of the US because they actually have the most comprehensive data sets in terms of splitting out what we've got here. And when this is PitchBook data, when PitchBook data is talking about AI funding, it's talking about all of those layers. So it's from the chip manufacturers to vertical SaaS that's AI that's AI first to robotics and automation, etc. So that's what we're actually talking about here. But a couple of the themes here is like, so you've seen this ongoing increase in the percentage of deal count, which is 35% as of June 2025, and it's increased a little bit since then in terms of the last quarter. But certainly in terms of deal volume, it's been extraordinary what we've actually seen in 2025, which is 2/3 of it has actually gone into that. Now, that's been impacted from what we've seen on the right there. So this is a top 10 global deals in 2025. So a lot of that funding has gone into these later stage hyperscalers that we've actually got here. But even if you actually split that out and you actually look more across the different funding rounds, you can see here that the data is clearly showing that we're seeing a premium for those AI first businesses, and you can see it in each of the funding rounds here in that top chart there. So the dark bar is, AI deals, and the lighter bar there is non-AI deals. So you can see a premium in terms of the actual valuations at each of the deal stages, but you can also see here in terms of the step up. So what this is actually looking at is, if I go from a seed to a Series A round, how much did my valuation actually increase at each of those levels? And again, you can see that the actual step up between valuations between funding rounds is actually higher in the AI than the non-AI. So I guess that raises the question about, AI bubble and are we all just getting carried away here? I'd love to kind of get some of your perspectives in terms of, what you're seeing in your portfolio, what's driving these premiums that are in the AI focused companies, and how you're actually thinking about it as an investor. Maybe start with you, Kate.
Yeah, I think this is a hard question. I think like everyone is toiling with the question of, is this a bubble? Is it not a bubble? I can see arguments on both sides, and I see that kind of like messaging reflected in the news a lot as well. Like, yes, it's a bubble. I think you could argue like coming out of looking at America, I think you can argue, yes, it's a bubble. There's these ridiculous valuations. They're spending more capex like per percent, like as a percentage of GDP than they were in the .com crash. Like there's a few stats that point towards the fact that it's a bubble. And I think like a lot of the news, like the New York Times came out with a new article the other day claiming like this is definitely a bubble, we're calling it. So I think you can hang on to a lot of these stats. Like I don't have a bunch to hand clearly, but there are a few that kind of lean towards that. Where I see on the other side though, this like that it's not a bubble, is that like is like maybe two core things. One is like the actual efficiency gains that are translating. Like this is not this new tech AI is not kind of translating to something in 5 to 10 years time. It's actually like the change that we're seeing is happening right now. And so often these valuations reflect what we think is going to happen in 5 to 10 years time. And that is super hard to predict. But judging on what has happened in the last 6 months, like we are seeing that efficiency gain. Like we are seeing change. Like, like costs are going down as a result of AI, efficiency's going like. So I think you're first of all saying like true efficiency short term, as opposed to sort of this far off, we don't know if it's ever going to translate. Second thing I'd say is profitability and like actual revenue as well, which kind of relates to the first point. But like if you look at OpenAI, for example, like again, like they are generating pretty solid free like cash flows. And I think if you look at the multiples in the context of cash flows, then the like it's not as out of this world as you might think. I think the multiples on a cash flow basis are like not as dissimilar, or they're like a lot lower than what you would have seen in the .com sort of crash. So there's 2 points, but like I'm kind of 2/3 it's not a bubble, 1/3 it's a bubble.
Chris?
Yeah, so I think we just park the OpenAI's, Anthropic's, XAI, like that. That's kind of like one category that you'd almost not say is venture capital anymore. The quantum of cash is more like private equity, if not above and beyond that. So I don't think it's necessarily that helpful for anyone to discuss what's going on at that end. I think ultimately one of those players or several of those players will go on to be very, very large, publicly listed, very, very important, if they're not already, companies in the world. And so I think we like from a venture capital or a startup, early stage startup perspective, it's kind of an irrelevant set of companies to talk about. I think I agree with Kate. Like, I think like the time to value piece is what's super interesting. So how quickly, it's not like crypto where you're sort of trying to understand like what's the use case. If we do this, we bring it on chain and it's going to do blah, 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 blah. And no one could really wrap their head around it for a very long time. We're starting to now. But like there are, like you plug it in and it delivers value. It delivers value across the organization for the individual. And therefore these businesses are growing very, very quickly, and adoption rates are very, very high. I think like to defend VCs and suggest that we're not completely irrational lemmings, I would say that like we're at the end of the day, we're looking at how big's the market, how fast is the company growing, obviously the quality of the team and the quality of the platform that they're building. But I think if you combine the fact that a lot of these businesses have actually unlocked brand new markets, so at one end of the spectrum, what Kate mentioned, like brand new industries that just were not touching tech before have been unopened. Another end of the spectrum, like, AI and voice has now transformed things like call centers and how businesses think about customer service and how they interact with their customers. Like that 3 years ago, you were basically outsourcing that function to maybe a cheaper team in a cheaper market, but now a lot of that can be done by AI. So there's these huge TAMs that are being unlocked, and a lot of these businesses are growing very, very quickly. And they're the ones that are commanding higher multiples from a valuation standpoint, higher deal sizes. So from the cut-through data, we don't have great valuation data, but we do see deal sizes. And the deal size, like the higher deal sizes in a given round compared to the lower deal sizes in a given round is a good proxy for how hot the round was, because if a company goes out and tries to raise $10 million, but they end up oversubscribed, they might bump it up to $12 million. If they're undersubscribed, they bring it down to 6. It's not perfect, but it's a good proxy. And like the rational side of us say, well, why is a deal hot? It's not just because it's got AI in it. It's because it is growing very, very quickly. It's growing into a big market. Time to value is so high that when we speak to customers, they adore it. Never going to get rid of it because it has become so critical to the workflow. And so we see the application layer companies that are commanding these outrageous valuations here and overseas. It's not every company. Just because you're an AI first business, that you are not by default commanding investors' attention. And like the size of Airtree's pipeline is far bigger than ours. And I can say from our perspective, we are still declining, unfortunately, 99 out of 100 opportunities that we see, even though that so many of them are, do have an AI component to them.
Yeah, great. And Yash?
Yeah, look, it's definitely bubbly, but I would say there's a lot of, like I talk about AI washing. There is a lot of that, and so our job is to sift through what is hype and what is real. I'd say, look, from our portfolio, I'll give an example of one of our portfolio. We invested alpha stage product, 0 or 1 alpha client. Within a year, they have 100 law firms using their product. You look at their revenues, you look at the product usage, and we continue to see this exponential graph, which looks like nothing, and then all of a sudden it's this curve. Same thing we're just seeing across some of our portfolio. There is something there, and we believe that those companies definitely, there's high value in what's being generated. And when we talk to that example, when I talk to the law firms, they're like, we're just getting, people are starting to share what they're doing a lot more. They collaborate and they're finding that value, and it just, there's this network effect that starts to happen because it's so useful. And so if AI, one thing to be 100% clear in all of this, AI is not the product. Okay. And it's table stakes when you're going to have access to all this technology. So that's like, what are we building around it? And it is that value of that process and combining, workflows into that's of high value. So it's re-engineering a business that this becomes an integral part of it, and adding additional things into that maybe aren't AI, but are highly valuable. And so I think for those companies, I don't think it's hype, but there's a lot of BS as well. And so I would say majority, there's going to be a lot of overvalued companies, but as we've seen in past platform shifts, there are the next incumbents being made right now that are the startups right now. And so the Googles and the Facebooks we think there'll be some of those coming through, and even at different levels, whilst there might not all be these massive companies, we think there'll be some significant businesses that are being born now.
I guess I guess the thing for people to remember is, regardless of if the company is not, is a genuine AI first business and has some real insights, I guess we're not getting away from the power law anytime soon, in that, by its nature, investing in startups, a lot of them won't succeed and some will succeed, and they could have even greater results, given the velocity we're seeing of their growth of some of these AI-powered businesses. But there's still going to be losers amongst the bets that we're taking.
100%.
Just before we finish up on the funding side, one thing I'd like to just switching back a little bit is we showed the graduation rates. We talked about companies that have been funded through 21, 22, which is the funding bubble on that. If you're in that position, or if you're actually maybe you're not an AI first business, like how are you thinking about those supporting existing portfolio companies that aren't AI first? And then also, if there are companies that aren't AI first now in terms of building product, how are you thinking about those two? So sort of two questions. I'd love to kind of get your perspectives on those. Maybe Chris, kick off with you.
Yeah, so I do think it will be harder to fundraise if you are not growing very, very, very quickly, or have a real genuine AI offering if you're a software business. If you are, I think that there will be investors that will invest in you. We at 5V would invest in you if you weren't an AI first company, but you would need to be growing commensurate with what the traditional expectations of a venture capital firm would be of a startup. I think one of the things that we've spent time with our portfolio on is to ensure that they are at least thinking about it. And it's probably gone beyond that now. It's beyond just thinking about it, but actually, at a minimum, their teams should be, their engineering team should be using Cursor or one of the AI tools to help you be more productive. But then thinking through, okay, well, if I'm a business that's been around for a certain amount of time, and I've have this product on the shelf, are there any net new products, or are there any augmentations to the current products that we could make that would actually make the product better, which is key, or be net new benefit to the customers. So I do think that all of us in our jobs should be thinking about how we can utilize AI to work better. And then from our portfolio, some of our more mature portfolio companies, and this stands on the private equity side at 5E and my side on the venture side, it's like, if we know that this technology can improve customer experience, can unlock new data sets, or just make a product run more smoothly, then the business runs the risk of being left behind from a product experience perspective if they're not front foot about it. But right. We're seeing a lot of companies that if they're hanging around the sort of low double-digit growth, sort of sub 50% growth, where there is no AI angle at all, some of those businesses were getting funded over the past few years post-bubble. But I think that they would find it really tricky at the moment unless there was a hardware component, or it wasn't sort of just pure play B2B software.
Yeah, great. And Kate, how are you thinking about it? How's the Airtree thinking about this?
Yeah, I kind of agree with a lot of what Chris said. I think growth gets rewarded with high valuations and investment. And so if I was a founder, I would be trying to focus on that, not on the valuation, not on fundraising, but on what is going to actually change that, which is the growth of your business. And I think okay, obviously that's a lot easier said than done. What are some things that you have available to you now? Probably the thing that's most accessible that you didn't have in the last few years to grow at the rate you kind of want to now is AI, and it's like exactly what Chris said, like leveraging it within your business. That might be like in recruitment, in your engineering team, in your sales team. Are you automating how you're getting copy out? Are you automating how you screen candidates to talk to? Like there's internal efficiencies. I think there's secondly, there's ways that AI can make your product better. Like are you leveraging AI to make sure that your product is the most exciting thing that your customers see that day? And like is that your core focus, and is that how you're going to grow? And then I think like the third thing that like is like your go to market and your brand strategy is still super important. Like is there things that you can be doing to refine that? And like I'd say the trend on that in the last 6 months that we see is more founder led sales, focusing on getting viral, focusing on like what content goes viral, what so like there are a few levers like available to you, but like it's obviously incredibly difficult, but I'd say that like growth gets rewarded, and that would be my focus first and foremost if I'm trying to raise.
Great, excellent. I just want to wrap up the funding bit there, and just move on to the sort of the team dynamics of how AI is impacting startup teams. So, one of the one of the most sort of interesting and maybe controversial comments that's been recently is like, Sam Altman apparently said, there's a betting pool on the first year there's a one-person billion-dollar company. So that's a very extreme, but there's no doubt we've seen a consistent trend in terms of median team sizes at Series A levels have come down consistently since 2020. Some of that's probably post the funding bubble 21, 22, but we're seeing a continuation of that trend. We're seeing ARR per FTE continue to actually push up. And then I love this chart on the right here because I think it gives a really interesting framework for actually thinking about, human-powered platforms, and then, how many FTEs it took before you got to 100 mil ARR. So you can see there, I think Airbnb was around 900, and then you've got product led, which actually accelerated that, and then you've got these new groups of entities coming in there. And I take the point that you said, Chris, with you kind of might step back from the open AI and those, but we've got a real trend here, right, in terms of actually revenue per FTE accelerating, better metrics. I'd love to get your thoughts around, the billion-dollar one-person company. Is it a good thing or is it a bad thing? What are you seeing in your portfolio? Are you seeing trends that actually are in line with what we're sort of seeing in the diagram on the right here? And then how do you expect to see that continue to going forward? So maybe start with you, Yash.
Look, I think this is an accelerant for everything, and more efficient. So we're seeing smaller companies. I think this is the thing, is if you are using that throughout what you're doing, you can produce. So an AI engineer using AI that knows how to do that, we're seeing 10x developers coming out and using that, and they're able to produce more. So I think where you have teams that are able to use this effectively, it's no doubt we're seeing that smaller, leaner companies, and that's what excites us. Is if companies start that and they're on that journey early, they're able to do what you're seeing there, where the progress is just so quickly. So yeah, we think that in terms of billion-dollar single person companies, I'm not sure it's a good thing, but I do think it's possible, and this is highly scalable. So if you're providing value now, you don't need as many people, and that's just so it's going to be how do you sort of navigate that to find what the right size is. I think as well, this is a challenge for incumbents. How do you cannibalize yourself to compete? And that's why we love startups. That's why that's where the opportunity is to outperform, and we keep having these things, and even the bigger players. But so that's where we're at, and I think for all of us, I mean, we think about this in terms of we've got to continually learn and evolve and not fall in love with any particular technology. And I think those people that can do that in whatever the role in an organization, small or large, I think is where we see that right kind of employees will thrive. So I do think the company sizes will definitely be smaller in a lot of cases, but I think it's definitely, that's what the numbers are showing. Just depends on, if there are, I think there will be some areas where it's going to grow as well. So I might just pause.
The team size will grow. Is that what you're saying?
Yeah. Look, so I just think it depends on what the businesses are doing. But generally, if you're using AI in that, I think it will, and you can use it effectively. Every organization, particularly in what we look at, will definitely get more efficient. I just probably add, I think there's opportunities in non-AI businesses that are purely, we are going to value in person, we're going to value experiential things. And so whilst and I'm not saying it's a thing that we will invest in, but I think there's massive opportunities in businesses that are actually doing the counter of what we're seeing, which is to bring people together, and people are going to really crave those in-person real things as well. So that's maybe just a little side thing as well. So they'll require real people as well.
Yeah. Kate or Chris, you got anything to add to this one?
Look, I think that ARR per FTE should, if AI delivers on the efficiencies that it's already delivering on, it makes sense that if every person can do the same amount of work, more work, then you should need fewer people. That relates to, just like you need fewer people when you on a farm, when you have a tractor. I think that is pretty logical bit of maths. In terms of the $1 billion company, I think that this was probably said in somewhat hyperbole. Anyone that's run a business, I know Sam Altman's running and has run businesses before, but anyone that's run a business knows that there's a lot of jobs to be done. And to get to $1 billion, whether that's revenue or if that's $100 million of revenue with a 10 times valuation multiple, if you've got a partnerships part of your business, then there's a lot of conversations that go into corporate partnerships. If you're sending out billions of dollars worth of invoices every year, then there's a lot of work that goes into that. There's the idea that you're just going to create some magical product that is only going to require one person to just sit there and let the computers run at it. I think we're a way off that. Who knows where we could be in 10 years? I think most people generally underestimate what can be done over the longer term and overestimate what will be done in the short. So I think we're a way off the $1 billion company led by with one person piece. But I'll say that, like, we at 5E, one of the data points we used to track in a big database that we have of companies is how many employees do they have, and we'd scrape that regularly, completely legally, of course, but to understand whether or not the companies were growing, and that metric is basically being thrown out of the window for us.
Yep.
So using growth in headcount as a proxy for progress has definitely, fallen way down the pecking order. And we are encouraging our companies to look at ARR divided by headcount as a key metric to track.
Yeah. Great. Kate, anything to add to this one?
Yeah, I agree that we also used to have tools that kind of looked at number of employee growth over time, and I think that's a bit redundant now. Like, there's so many people on Twitter talking about how proud they are of their tiny teams and their big revenue numbers. So I don't think it's super reliable anymore. I just, anecdotally from our portfolio, the two of the pre-seed deals I worked on this year that we haven't announced yet, they're tiny teams. They're super small. They're hiring senior engineers, and it's kind of like 1 to 4 man teams building a product. So yeah, I think the trends that we see overseas, it's definitely translating here, and like Chris said, I think it makes sense.
Yeah. I think the other thing that I think about as well in terms of just total workforce as well is the flip side of being able to actually do more with less people is also you don't necessarily need the same cost base to actually innovate as well, right? So you mentioned it, touched on it earlier, Kate, around it brings in different innovation cases that maybe weren't relevant earlier on, be it applying AI to new industries, but even actually being able to actually build more and get more progress with it with less funding. And so, part of my thesis and how I think this should evolve over time is we should actually see a lot more innovation that's possible to be, that's commercially viable, and problems that are commercially viable to be solved. And therefore, there should be a lot more innovation going, even though the average team size might continue to go down.
Yeah.
And that's where we think the opportunity is, to be honest. Like, we think early is a harder but more opportunity because of that reason.
Yeah. So I've got a couple other slides here. I'm conscious on time here, but this is just some interesting data. Again, the data sets tend to be a little bit deeper in the US, so I'll pull this one out here. But this is actually looking at, which size companies are hiring AI and machine learning roles, and this is more towards the larger ones, but there could be a definitional issue here. Smaller companies probably actually are less worried about specific titles. So I'd take that one with a little bit of a grain of salt. But interestingly, going back to that funding data that we had earlier on, is like, if you actually look at the percentage of companies with AI/machine learning talent by industry, hardware is actually the top one, life science is the second one, which is actually lines more up with the funding data that we saw in Q3 here in Australia. I don't know whether you guys got any insights on that or any comments on that. I'd love to hear them.
Nothing additional. I think I touched on it before. I think AI in the hardware space, both because the hardware is often has some level of AI in it, but also there's a lot of software companies that are growing very, very quickly because of that hardware moat or that connectivity into some smart hardware.
Kate or Yash, anything to add to that one?
Just say it's
No, look,
oh, sorry, go.
No, you go, Kate. Go.
As I mentioned at the start, like our focus is predominantly software. So I feel like I don't really see this trend like reflected in our pipeline or our investments in the last 12 months. But I take Chris's point that like there is AI in all of these. But I'd say this is like less of what I see on a day-to-day, just anecdotally.
Okay.
Look, I'd just say, look, it's hard to get top talent in that space. I think there's a really people that are got experience are really hard to come by, and that's what we're seeing in the portfolio as well, to attract, and that's the challenge for a lot of companies, is to get that talent. Yeah.
And you can see that this is some of the comp data, both salary and then also equity comp, and you can see AI machine-based. These are engineering roles predominantly versus a standard software engineering role, and you can see that there's a pretty consistent role here. So the P2, P3, P4, P5 relates to the role category. So P2 is more junior, M6 is management and high level. So you can see that the salary goes up there, but you can see a pretty consistent trend where those more AI and machine learning focused roles are actually attracting a premium somewhere around 20% across both of those. And again, any observations from what you're seeing on top of what you've said there, Yash, in terms of actually availability of talent in the market here? How are your portfolio companies dealing with this one and trying to get the right people on board?
Yeah, it's a bit of a battle. I mean, in terms of you've got to try and attract people with, money's one component of that, but we are, I do think building a good culture and people want to be part. I can see that the ESOP side of things is also a way to attract that talent, and people can see this is the time to build. And so I guess it's that structure between that salary and what they, what they can offer otherwise is important.
Right. Kate, you got any thoughts of what you're seeing in your portfolio?
I mean, talent represents like the most valuable asset and biggest bottleneck at the moment, like AI engineering talent. And so as a result, I think it is being rewarded with higher compensation packages in equity and salary. This trend holds true in what we see. Like the other thing maybe that I'd add on top of this is just like the education in the Australian market around equity. And I just think I was chatting to Chloe, who leads talent and recruiting in Airtree, and she was saying there's just been like, in her career, she's really seen like the Australian market sort of mature and how they're talking about ESOP and what they're asking for, and that just going up exponentially again in kind of the last 12 months. But yeah, like it's really hard to recruit talent. It's something that we hear all the time. And so like one lever you have to pull is like salary and equity, which is what we're trying to do to get the best talent.
Yeah, I think obviously the equity in comp is very near and dear to our heart, and one of the things tips that I'd give, and you've seen it in some of the data, is like, it doesn't have to be standard for everyone, right? So be prepared to be flexible with how you actually do that. What am I talking about there? I'm talking about, you can play around with your vesting periods. The default is generally, 4-year time-based vesting with 12-month cliff. You can play around with those dynamics. You can actually use milestone-based vesting instead of time-based vesting. So, and all of those, the big headline numbers that we've seen about, Zuck hiring someone from Apple and for $100 million, like all of those have that many caveats on it, right? It's not just, you're going to get $100 million in equity. So I would encourage founders to really think about being creative with how they actually structure, particularly the equity incentives when they're actually looking to attract top talent. Chris, anything else on the talent side from that you're seeing?
I'm all good, and I apologize. I have to wrap.
Okay.
So I don't know how many more slides you
No, that's it really. I was actually just going to go into the wrap up. So I don't know if you've got time to just wrap, Chris. Love to get your final thoughts and any tips for founders navigating through this.
Yeah, look, tip is just run your own race, particularly at the early stage. You need to just be building a product that people and your customers love. So don't get distracted by things like Zuck paying $100 million for an engineer over the other side of the world. Don't get distracted by Anthropic raising $13 billion. Like, it's all completely irrelevant to you. So build stuff that your customers want, solve a real pain point. Don't just try and jump on the wave and the hot trend of AI. If you want to build in that space, learn how to do it properly, or bring in folks that can help you. And yeah, at the end of the day, in 2 years from now, we're probably not going to be talking about AI companies anymore. This is just going to be part of the stack. So we're in a moment of time. It's hot to talk about, but at the end of the day, you got to deliver value to your customers. And if you do that and you do it well and you want to raise money, there'll be a lot of investors that want to back you. In terms of reaching out to myself, you can email me direct if you're over $1 million software company, and you can email me direct at cgillings@5vcapital.com.
Great. Thanks, Chris. Appreciate it. Kate, and final thoughts, tips?
Final thoughts, tips, just I think like the opportunity that's available is greater than ever before. And so I think you need to what I'd be doing is reassessing like what my goals are. Like, what were my goals 3 years ago and what was my ambition 3 years ago? Like, now the sky has just risen, the limit has just risen. Like, do you need to reassess like what you want to build, where you want to go, where you want to take your business? Like the opportunity is great. So I think about how the opportunity affects your ambition and what you want to build. And that's kind of my leaving thoughts. I'm pretty excited, and yeah, you can contact me just via email is probably the best way. It's kate@airtree.vc, or message me on LinkedIn. I'm pretty responsive there too, but always keen to meet people in the space.
Thanks, Kate. And Yash.
Yeah, thanks. Look, I look, my big thing is AI is not the product, and we have to keep coming back to that whilst we've focused on this. It's about building value and building things that are useful, and to realize you don't always have to have the latest model, or there's value in each one. So it's understanding that And the other big thing is to not fall in love with the technology. We've got to keep learning. And so we all, doesn't matter what you're doing. To me, there's this mindset of just continually learning and be prepared to cannibalize yourself, because sometimes you can make decisions and it changes. And this is what I think is the opportunity and the threat. And particularly for larger organizations, they don't want to do that. This is very disruptive. Whereas for a startup, you have the ability to pivot and you have the ability to change a technical direction, or it hurts, but I think it's important to just realize that changing is really important, not to fall in love just because we went down this path. It's moving so quickly, and so sometimes re-engineering something is the smartest move, and but it's just being open to that and thinking about that, because it changes a lot.
Thanks, Yash. I really appreciate it. I guess just my final thoughts, just reinforcing, I've worked in startups and I've worked in corporates for many years, and the biggest issues, and I think most fundamental factor behind your success, is your people and your team at the end of the day. So, make sure that you're actually getting the right people on your team. It might be a smaller team, but actually that makes getting the right people even more important. As we someone mentioned earlier, like your core thing is going to be what's your mission, what's your culture, and that's going to be the most important thing. But also remember about things like your equity incentives. Use those wisely in terms of making sure that you're not only attracting the right talent that you need to help you grow, but you're also retaining and rewarding them through that successful journey as well. So thanks very much for joining us. I really appreciate your time, Kate and Yash. Tila, anything we need to finish up with? We'll send out a copy of the slides. We'll also share the recording if you want to listen back to it as well. Feel free to reach out to myself or Tila if you've got anything you want to talk about, cake or whatever as well. And thanks very much for your time again. I really appreciate it.
Thanks so much, Cal.
everyone.
Thanks,
See you,
guys.
everyone.
See you later.
Bye.